Today, it's a pleasure to have GRI Walk with Samuel Vetrak, who is the founder and CEO of BONARD, a leading provider of global market research and investment intelligence in student housing. Samuel, it's always great talking to you. I know you're very busy and I appreciate your time here. Since you became our knowledge partner, GRI knowledge partner for the Student Housing Global Committee back in summer 2020, you have been also acting as a vice chair of this committee. And I want to start before I pass to you for you to make to introduce yourself. One thing I find very funny about you, Samuel, and it's probably what's gonna make this conversation very interesting, is that we have members in almost 100 countries, and I spoke to members from Europe, from the US, from South America, pretty much everywhere. And whenever the topic is student housing, your name is always mentioned by someone who knows what you're talking about, who have probably the right information, and someone who talks to everyone in this marketplace. So thank you very much for being here today. It's a pleasure having you with us. If you don't mind, to introduce yourself as you wish and tell us a little bit more about your company, but also about the student housing as an asset class would be wonderful. Thank you.
Thank you. Pleasure for me to be here. Thank you for such a nice introduction. BONARD was established about 14 years ago as a research and advisory firm to serve the student sector. So the idea was to be a specialist and expert for a very narrow family of asset classes, but being on a global level. So we grew with education and student housing asset class expansion over the years to become sort of go-to address in this sector. We are headquartered and started in Vienna. Then we expanded to other regions. Now we are global with offices and teams in Americas, Europe, Asia, Australia, having 60 people now. We have done over 460 projects in this asset class and communicate with about 700 investment groups that are engaged in student housing. We monitor 7,000 assets, operating assets in the world, and about 700 in pipeline that are about to be built in next 2-3 years. So we, as you mentioned, we try to know the what and how and who and where is going on in the sector, and become sort of a hub for knowledge, for data, for intelligence, for advisory, transactions, opportunities, and sort of help the newcomers to enter the asset class, or the ones who are already in the asset class to succeed within this asset class.
And talk about the new asset class, Samuel. Let's imagine that somebody's here for the first time, developing residential market or offices or hotels, and is looking to learn a bit more about student housing. Could you help us with a bit of definition in terms of understanding for products, rents? When we talk about student housing, what exactly are we talking about?
Well, student housing used to be a very niche asset class, but it has grown to a level that now it's probably widely recognized, ranked, and about a third of the top 400 investors are already engaged. By definition, the product is sort of a hotel-like. So it's about 60 to 70% of the GLA to be dedicated to rooms that are 18 to 20 square meter studios or single and suite rooms. So we have a bed, bath, and a kitchenette in a studio, and the other 30% of the floor is dedicated to, of course, communications, but mainly to communal spaces where you have all the tools for community building, like the communal kitchen, library, cinema room, and all other facility amenities that basically create the life within the community, and that's one of the added value of this product. The tenants are mostly students, be it domestic or international students who need the bed, so they are mobile. They usually stay somewhere in between 6 to 12 months. In about 30% of cases, they extend to more than 1 year. The rental levels are somewhere around $600 to $800 for the studio. And the occupancies usually are in the zone of 95 to 98% in predominant majority of the cases. Location-wise, the product is usually either sort of close to several universities, as this is directly led model, so the beds are actually occupied by individual students. So the proximity to university as well as proximity to downtown within about 15 to 20 minutes to both is probably the most important factor, which determines the search for site and location for this type of a product. Operation wise, it's again hotel-like, so about less than 5% is on master lease, but 95% cases is operated by either own opco or independent operator for a management fee. So it's a pretty familiar model. So it's basically going the same standardized way.
Interesting. And can you tell us a bit more about where student housing is in terms of size, geography, history?
Well, we can say that student housing as an asset class is about 20 years old. So it all started in the US about 20 years ago as a professional standalone asset class. Then about 15 years ago, 2004-5, it started in the UK. 10 years ago, continental Europe, mostly Western Europe. CE in Australia started about 5 years ago, and now student housing is moving to Latin America and Canada, partially to territories like Middle East, Japan, Singapore. So we see some expansion there. So from a very niche asset class, now we are in a private stock that is sort of transactable stock, about more than 100 billion and more than 3,000 assets in the world and more than 500,000 beds that are subject of existing operating stock and transaction. On top of it, we have new investments, so we expect about 200 beds, private beds to be built in next 5 years, and which is about 730 assets. So in midterm, next 5 years by 2025, we see about a new 100 billion investment opportunity in this asset class. And it's nicely yielding now. So the investors are able to achieve somewhere in between, 100 to 200 BPS yield spread. So this way, it's a quite good asset class for them to enter.
And talking about investors, when it comes to these investors, from your experience globally, what type of investors are more keen on this kind of asset classes?
It depends on maturity of the market. So when you look at Poland or Brazil or new markets, as EU or UK was a couple of years ago, then it starts with family office. So local family offices put together the capital. They develop with the local banks. They create one or two assets. Then in a very short investment cycle, in 3 to 4 years, the private equity comes to the table. They assemble, consolidate a portfolio, increase the value, add new properties to the portfolio, and then about 2 to 3 years ago, we noticed a strong influx of institutional capital that is looking for deployment of such capital at the end of the sort of investment chain, and looking for scale that it needed some time to be developed. So we see all types of capital interested in this asset class. When we had about 500 investment groups about 3 years ago, now we have more than 700 investment groups to be involved. So it's quite a rapid growth of interest. When it comes to capital by origin, then it's mostly US and UK capital that is familiar with this asset class and expanding either to tier 2, tier 3 cities within their own territories, or expanding to Europe or even further. The sort of Middle East and Asian capital, especially Singapore, it's quite exposed to this asset class as well. But what is probably the most relevant is that we see a lot of institutional capital coming to the sector, which is changing the overall dynamics. So it's a pressure for scale, pressure for more operators being independent operators being in the sector, and looking for new opportunities. So that has changed the pace.
Very interesting. It's very interesting, especially for you to be able to keep track on the change of the market in these years and how to dialogue with these investors when you're raising funds and so on. I suppose you do a lot of, you help them with that. And talking about money, what about the banks? Are they, how can I say, are they friendly to this kind of asset classes? Do they like to get involved in this, or it is really completely private money, not bank money?
Yet again, it depends on the maturity of the market. So in the US or UK or Western Europe, where we can say that markets are to a certain degree matured, the banks really like the asset class. And it's not only banks, all types of investors or financiers and lenders. And the LTVs is in a very sort of favorable condition. Pre-COVID, probably in a zone of 70 to 30, now probably 60 to 40. And if somebody needs a debt to finance the opportunity, then there are usually several offers for that. When it comes to emerging markets, it needs a lot of education to the banks. The process is longer, the LTVs are less fortunate, in the zone of, let's say, 60, 40, 50, 50. But, it's pretty much the same scenario as we experienced in the UK or in the Netherlands 7 years ago, when it took some time and data and education. But once it comes down to numbers, then they like the asset class. So it's just a matter of getting familiar with the asset class. We haven't seen much of a difficulty with financing.
Interesting, very interesting. When it comes to operators, would you say that is there a lot of them or only a few? And what's their perception of the student housing going forward?
Operators are perhaps the biggest missing part of this asset class. So first, let me explain. As I mentioned, most of them are on an independent management contract, but most of the, let's say, landlords or owners are tempted to have their own OpCo and manage the student housing assets basically in-house. And they make a lot of mistakes. Their sort of cost on OPEX, CAPEX, and management are in the zone of 35 to 40%. So it leaves us with basically 60 to 65% NOI. Therefore, it's very difficult for them to run on their own. They need to learn in the process, and they don't reach such efficiencies like the independent professional operators that learned on the way already. They made the mistakes, they made the efficiencies, they have scale, they have their own mobilization units, marketing expertise, dynamic pricing, etc., and are able to reach the NOIs in the zone of 65 to 70%. So the costs go down to 30%, and therefore these are pretty much very desired, especially by institutional investors now that make it as a condition to have an independent operator and don't have the ambition to have a in-house operation. So on the other hand, for the operators, and there are not that many, to be honest, there are a few dozens for all the private stock that I mentioned. So they are very on demand. They are now very selective which project they enter in. And what matters to them the most is the scale. So for the buildings with less than 300 beds, they have quite difficulties to enter. So on the other hand, the investors often don't have enough confidence to enter with such a project right away. The average size of the project in a pipeline of those 200,000 beds is 274 beds per project. So you can see the ambition of operators is slightly different than the ambition of investors.
With a gap.
So this needs to be aligned, and sort of they need to find a common ground for sufficient efficiencies. So
interesting. And in terms of documentation or data, you know how you as a research company see student housing in terms of data transparency, and also when you're talking to a property owner or a developer, what kind of data or research or assessments are investment companies looking for? So if I try to raise some funds for my project now, what kind of data do I need to provide to the investors?
well, even though these asset classes probably not as documented as the mainstream asset classes like office or hotels, but it's increasingly more documented and probably sufficiently now for even institutional investors being convenient to enter. So it's transparent enough for all types of investors, and all risks have been addressed. We already have independent benchmarks, and we are in a position to sort of provide any kind of answer that needs to be there. What was the challenge at the beginning was that both the asset class and us as a main research supplier for the sector, we had only anecdotal data from Spain or Norway or Germany. But now, we have reached sufficient coverage of more than 130 markets. So the data is universal, comparable, standardized, certified, conducted according to certain standards in the same way in all the territories. So investors who are creating portfolios have same data for Madrid as they have for Heidelberg or Milan. Wow. And this way it's quite convenient for them to be in this asset class. When it comes to type of research, to answer your second question, we have all type of inquiries in that sort of vertical portfolio of what stakeholders. So they usually start with assessment of the continent, then country, then city, then plot. Then we do the sort of financial projections, feasibility study, concluded with the underwriting report, and then we measure the property over the years. So independent reporting on the performance, operational data, OPEX, CAPEX, sinking fund, management costs, overperformances, underperformances, and then in about 5 to 7 years, which is the investment cycle, most frequent investment cycle in this asset class, then we are engaged on the buy side or sell side to support the overall case with sufficient data. And we also do student customer surveys. So we do field research that's quite on demand. That we have a mobile unit that travels around the world and does the field in street level data. So we are asking thousands of students on a hard, old-fashioned way what they want, where they would like to live, how much they would pay for this type of product. So we're showing them pictures.
Mm-hmm.
So it's a proper research that our clients really like. As based on that, they have a hard evidence to navigate the product and reach the consolidation of occupancies very quickly. They get to, let's say, desired level of 95% plus in about less than 6 months with such data. So of course, many groups have in-house data supply, but it takes quite long to them. So that's why they turn to us. Not only consistency, but pace. They need to progress fast. So
absolutely. And probably have a lot of people looking to different kind of opportunities and trying to understand how are these opportunities for this kind of asset classes. But also, I bet a lot of people that are listening to us right now are wondering how much 2020 with COVID has, impacted the sector, has changed with so many challenges for the universities and so on. How everything happened in 2020, and how is this market right now? Where are the opportunities? And if you had a recommendation or a suggestion to an investor, what would that be?
Well, I will probably start backwards. So COVID did affect this asset class, as probably every other asset class, but less so than hotels or office. So the occupancies went down from, let's say, 95 to 98% down to, in about, in some countries, 92 to 95. So impacted by about 3 to 5% in Germany, for example. So not that much. In some other territories like UK, France, it was about 10%. In the worst case scenarios we have noticed related to occupancies was about 20 to 30%, but not such a dramatic impact of COVID on this asset class. It has shown this so-called counter-cyclical defensive nature, where basically students need to study, as this is a time-limited age-related opportunity for them, as well as that they need to continue their studies. And many of them consider study destination to be their home. They have friends there, they have networks, jobs. So even though the university was online, they moved to on-site and stayed in a destination of their study, or didn't even return home. So this asset class was impacted in general by about 10% of in terms of occupancies, but it has learned us a very strong lesson or two. One, students don't want to study online, so there will be no permanent impact of for this asset class. And second, that there is a new propensity for students to live in flats and rather live in purpose-built student accommodation, because they have single studios there, they are isolated if they need to, they have infrastructure if they need to for the case. And so we see more natural demand now and in the future for this type of a product. For example, the single studios are now booked out much faster than and at a normal, not discounted rental levels. than shared rooms. From the investment perspective and opportunities, well, based on the overall research and statistics, also when we discussed it on the GRI, about 60%, more than 60% of investors want to invest even more now than before COVID, because it proved its counter-cyclical defensive nature. About 10% is divesting, and 25% is on hold, wait and see position, which probably says a lot about the investment mood. Opportunities are easier now to follow and find or get, because we don't have so much competition from the other asset classes. So when we were bidding for a building in Munich, well, the other asset classes were much stronger. But now we have more opportunity, it's more accessible. So investors see this as an opportunistic time, and we already have a lot of opportunistic investors now, actually investing even more than before COVID.
Very interesting. Very interesting. You talk about different markets, but I know some people have sent questions that would like us to ask you is about the more developed markets. Would the same logic applies for the US, for example? You said that started, long ago in the US. Everything started with student housing in the US. In such a mature and developed market, do you still see room for growth in the US, for example, or do you think these trends that you are describing here would be more, applicable for the other part of the world?
Well, I see room for growth in both developed and developing markets in terms of student housing. So if you as an UK are considered to be developed or mature markets, well, I probably use an example. Like 10 years ago, when the provision rates, so beds to students, was at the level of about 15%, we all were wondering, where is enough? Where can it go? Is it mature? Is there a roof? And then we went to 20%. Same question, and we went 25% above 3 years ago. And we saw that this is the roof, and now we are at the 30% provision beds to students ratio, so saturation of the market. And we still see fully occupied, especially new stock is fully occupied. So definitely it relates to the quality of the product, location, amenities, operator, etc. But we don't see the market as being saturated in sort of tier 1 and tier 2 locations. Where we see on top of it potential development are the tier 3 locations, where basically these are new markets to expand, both in the US and UK, and the stock can grow over there. When it comes to emerging markets in terms of student housing, the economy, we see sort of CEE as a very good region to build stock and portfolios over there. Latin America, so already working in several projects, student housing projects there, and Canada. So Canada has very similar fundamentals as other well-working markets now. It has double-digit growth of students, but the student housing stock is minimal, and the growth is nowhere close to the increase of number of students. So over there, these markets are somewhere like Europe was 10 years ago. So a lot of opportunities to build new stock. We hope those markets, they have same principles. Of course, the product might be slightly different. So you cannot build the same in Brazil as you do in France, but the fundamentals and principles are the same. So we believe that there will be a very fruitful market.
Well, good to know that we need to watch out. And let's quickly, as we approach the end, I want to still touch on innovation and technology here. Um, what factors are driving innovation and the integration of technology into this asset class? I suppose with this, with the consumers being, the new generation, and looking to achieve better results, probably there's a good good number of innovation or kind of technologies being incorporated to student housing. What have you seen that is worth mentioning here, Samuel?
Well, the driver of technology is mostly the operational efficiencies. So this is pretty much a very simple product and asset class with close to 100% occupancies, 70% GLA, and community life. What makes a difference for an end customer is that it's all in one bill, very flexible to move in when I wish or move out, and community, because it's much more difficult to leave friends than walls. So if the community is there, then they like it, and it's an added value in comparison to living somewhere in a flat. So this way, operators need to find operational efficiencies, how to manage the sort of leasings, dynamic pricing, community life, events, then walk-ins, walkouts, so security as well. And this even 2-3% of OPEX makes a big difference on NOI and then valuation and exit value. So it's really important in this yielding operational assets that the operation costs are down, and the technology enables that in the long term.
Interesting. I see BONARD in a position that's quite unique at the moment, with such a potential in terms of asset class, with so much information going through you. You guys know pretty much everyone everywhere in the asset class that we're talking about student housing. What is the role that you like to see BONARD, taking in this ecosystem of student housing? How do you want BONARD to act and to be perceived by the real estate community that decide to be active in student housing for the next years?
Well, we are, and we want to be perceived even more as a credible address for data and connections in student housing. We are engaged in many happenings and transactions and projects. So we would like to be engaged in even more in new territories and new projects. Sort of a enabler of the asset class, and fast track, credible fast track. And we also moving to other rented residential asset classes. So that are by definition very similar, and we are both invited by the market as well as the opportunity to be there. So we are already similarly present in senior living, for example, build to rent, co-living. So this way we hope to replicate the story and service the stakeholders over there as well.
Perfect. Any final message to our audience? Anything you would like to leave as a message for the 2021?
Well, with this, as we started with student housing, I would probably conclude that this asset class, with its counter-cyclical defensive nature, is in a historically unique position. So I would like to invite investors, bankers, lenders, developers to be more present in this asset class, and with this, invite them to talk to us and help them to succeed in this asset class.
Absolutely. Thank you very much, Sam. It was very interesting. I think was a masterclass here, and I'm sure everybody appreciates here. Good having you. It's a pleasure to have you as a knowledge partner of the Global Committee for Student Housing for the GRI. Thank you very much.
Thank you. My pleasure, and I appreciate it.